Good morning, everyone. James Holmes Jr. with Black Lion Investments Incorporated. Today is Friday, January 29th. Originally, I had not planned on making any recordings until Monday. But with so much drama going on in the market this week, I felt it was my obligation to make a statement on the drama that's been going on this week with the stock exchanges and so forth. First of all, the big elephant in the room is the situation going on with GameStop and Reddit and a lot of the big hedge fund managers and so forth, and even the drama going on as to what the plans are as far as the SEC. So let's start from the beginning. So anyway, there are several hedge fund managers that have made large bets on shorting certain stocks. Let's just use GameStop, for example, because they're the one that's in the news the most. There's been others like AMC and Bed Bath & Beyond and so forth. But the one that's had the most volatile movements this week has been GameStop. Well, anyway, from my perspective, GameStop is just, to me, an ordinary stock. It's funny. My wife asked me yesterday, she's like, honey, do we own any GameStop? I'm like, no. Because it's just not that impressive. It started out at around $55 a week. In the future of it, we don't know for sure, but I mean, it's not like it just looks that great. The fundamentals of the stock says that maybe it should be somewhere around, where it's trading right now, in the general area anyway. Anyway, to make the long story short, you have several hedge fund managers that have been shorting stocks like GameStop. And they've been shorting them on margin, basically, which means borrowed money. They don't own the underlying stock. They're just betting that it'll go down without actually owning the stock. So what's happened is Reddit has had like a subgroup, what do they call, Wall Street Bets. And basically on their threads, they've been communicating that they want to force some short squeezes. And what I mean by short squeezes is that a lot of these hedge funds that have been shorting the stock, they can't short the stock if the stock continues to go up. So they're telling all of their buddies, just buy GameStop, keep buying it, keep buying it, keep buying it, keep buying it, keep buying it. And what happens is, if that stock goes up instead of down, at some point, those people that have been shorting the stock, they have to fill those positions. And so when they go and they have to buy those stock to fill those positions because they're going the absolute wrong way, and there's actually no limit on how much your losses can be. Keep in mind, a lot of these hedge funds, they have like blue hair money and stuff like that, money for like old ladies and senior citizens and things like that. So they really can't let it get too out of control. And so these little players kept buying the stock kept going up, and so there was a short squeeze. So these fund managers that had these short positions had to actually go out and buy this stock long, and boom, 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 boom. And what that does is that just jumps it up that much more. Anyway, the long and the short of it, that's the story, is that all these little retail buyers got together with Robinhood, and Robinhood wasn't the only app that was used, just so for the record. Some of the others involved, TD Ameritrade, Schwab, Fidelity, and so forth. But anyway, let me tell you what really happened. Yes, that happened. That's true. And the little guys, the way that they view it is a good way to stick it to the big guys, the whales. Because the whales have been doing that forever. The big blocks of money always have and always will control markets, control market movements, and control profits in the market. And if you don't realize that, you're delusional. You're either ignorant or you're delusional. They always have and they always will control it. So this was like the day for the little guys. But the funny thing about it is, even though the little guys think, yeah, we won, this was our day or whatever, it's not over yet. First of all, when you look at the fundamentals of the stock, it's not worth what it's trading at now. And I think it's over 200 now. I'll have to go and check. It got up to, overall, it was up like 1,700%, which is like crazy. I think it passed 400 at one point. Just don't quote me on that, but it was just, the bounce was crazy. Let me circle back to something real quick. Even though these little guys think they did all that, they didn't do all of that. Basically what they did was they just kind of got a little bit of the herding momentum going. So when you look at the volume of trading going on in that, these little cats in Robinhood cannot create that much volume. So what you had was some snarky institutional traders behind the scenes. They were going in and they were riding that wave. And I promise you, when they ride that wave, they're doing it a lot smarter than your retail investors, because these guys are riding their waves, profit taking, riding it up, profit taking, riding it up, profit taking. And I'll tell you something else. They're buying put options also. And so their positions are hedged. They rode the wave of these jokers all the way up, and they got put options. You can believe that. Do these little Robinhood guys have put options? No, most of them did all of their speculation with it on margin anyway. So anyway, at some point, that bubble will burst, and you know who's going to be left holding the bag? These little, individual traders. That's just the way it goes. But the damage is still done on a lot of the big boys. I mean, you got big funds like Point72 fund has lost probably almost $1 billion. D1 Capital Fund, $1 billion. Ken Griffin over at Melvin Capital, he's lost over $1 billion. Some of his buddies had to give him money just to shore up their position. So the long and the short of it is, when these big whales lose that kind of money in a day or two, they're not going to be happy, and they're going to make it known. Okay, so Robinhood suspended trading on certain stocks. They said you could sell, but you can't buy, which is, come on, really? But they weren't the only ones. TD Ameritrade and Schwab did also. And I'll tell you exactly why. You don't read about this, you don't hear about this, but this is how this works. Is that these big guys, they go, hey, we can't have this continue. This is crazy, okay? This is crazy. It's like you're taking the stock market and now it's a gambling casino. You change the rules. Funny how that works. They're fine as long as they're winning, not happy when they're losing. And personally, I don't even have a dog in this fight, so I'm on the sidelines eating my popcorn, watching the show. So anyway, they bring their big muscle and they tell these guys, Ameritrade, Schwab, Robinhood, control your minions. Control your minions. Our big dogs, our big wealthy blue hairs are losing too much money. We can't have this, not in America. Y'all handle your people. And so that's what happened. So that's why you couldn't, the last couple of days, could not go to Robinhood or Schwab or Ameritrade and buy any GameStop and so forth, and AMC and so forth. That's what happened. That's exactly what happened. So anyway, to me, it's entertaining. It's entertaining. And why I didn't participate in it is because when it gets to that point, it is gambling. But at the same time, everyone should have their free will to spend their money, invest their money, gamble their money any way they want to. The funny thing about it is, let's just say if the big whales were on the winning side of that and then all these little retail investors would have got creamed and lost all their money, the whales would have said nothing at all. Isn't that funny how that works? They would have said nothing at all. But now they're like screaming bloody murder. You got to do something to get rid of them. So there's going to be a lot of pressure on companies like Robinhood and so forth. SEC is probably going to tighten up some things. I know they're going to probably have some margin restrictions and things like that, because a lot of the damage done on both sides is all on margin, it's all on borrowed money. But anyway, next thing is Bitcoin. There's speculation. There's all kind of things in the air going on about that. The speculation is that Bitcoin is probably going to be one of the next targets for the whales to start shorting. And I've seen that for a while. Now, I think the momentum might be slowed a little bit. I personally don't think it's going to be as aggressive as they once had planned. A lot of things are happening behind the scenes. There are really a lot of institutions that do want to start holding Bitcoin. They do. Because of all the regulations and things like that, it's difficult for some of them too. But I expect it to be more normalized as time goes on. Now, before that happens, okay, the whales expect the whales to do what whales do, and that's market manipulation. Like I said, nobody ever says anything about it. When they're doing it to their advantage, they just get mad when it goes against them. But there will be some market manipulation whales. There is going to be some shorting of Bitcoin, and so there's going to be some downward pressure. No ifs, ands, or buts. But here is the difference: is that unlike these guys buying GameStop and all that, a lot of these guys that are buying that and they're reading Wall Street Beats on Reddit, basically they're just blindly following what Wall Street Beats tells them to do. Go out and do this. And these guys, it's almost like the people that went in on January 6th to the Capitol. They were just told, hey, look, go there, make your voice heard. And a lot of them just didn't even have much as far as facts. Let's just call it the way it is. So the GameStop situation, as far as I'm concerned, is a little bit like that. They're just blindly following. The herd is blindly following. Some of them will get massacred at some point. The whales will make sure of that, because they'll remember this. And I promise you, they'll stay up at nights figuring out ways to take out a good portion of them. But anyway, so when they do start shorting Bitcoin, it will be a little different, because the Bitcoin loyalists are much, much, much different than like these equity loyalists like GameStop and that type of stuff. Much, much difference. Your Bitcoin loyalists, for the most part, have done their research and they're comfortable. They're comfortable with the volatility and they're comfortable with their targets. And you know, the interesting thing about it is a lot of those guys, a lot of the loyalists with Bitcoin, what do we call that? We call it hodl. Hold on for dear life. And they just know that. It's like you have some, you own it, and you're just going to hold on to it. No matter what happens, you're going to hold on to it. And there's some interesting things about it. The Winklevoss twins, they've been saying for a while that they expect Bitcoin to go up to 500,000 per coin. And when they first said it, you know, people were like laughing at them. And what these guys have done, not so quietly, is they've invested hundreds of millions of dollars into their marketing platform, Genesis. And as far as I'm concerned, they're on mark. They're going to make a lot of money. And so Genesis is going to be the wallet for a lot of crypto, and they're going to be market makers. Also, well, I guess they already are. And they're going through the process now of getting all their SEC approvals and so forth. But these dudes, they're in position to just really, really make a killing. And I don't know if you guys remember or not who these guys were, but these are the cats that Zuckerberg stole Facebook from. He stole Facebook from them, and they went to court. And you're going to make me quote the exact amount of the settlement. I think Zuckerberg had to pay him somewhere over 60 million. I'm sorry, I don't have it right in front of me. And it's worth actually more than that, but that's what happened is Zuckerberg, these guys, while they were all at Harvard, took this to Zuckerberg to do some coding and things like that. Zuckerberg saw that, oh my goodness, this stuff could really explode. And what he did was, behind the scenes, he's stealing it all. He's stealing it. And that's what it is. Facebook is stolen. So, you know, if I put this on Facebook, there's a good chance it may not stay on Facebook. But those are actual facts. So anyway, these cats, they're not stupid. And so they were born wealthy. And so they predicted that it will eventually go to 500,000 per coin, and I believe that they are correct. And the funny thing about it is you have more and more people actually coming out and acknowledging that now. For example, the latest one was Kathy Woods. Kathy Woods is a big hedge fund manager. And the thing about Kathy Woods, I personally like her way better than most hedge fund managers. Ray Diallo, I like him and I respect him. But the majority of these guys, they say one thing and do another. Let's just call it. Remember, I was there and I used to have to follow those orders. They take the positions and then they tell you, okay, this is what you call your customer and tell them to buy. Really. They take the positions and then say, okay, call. This is what tell your customers to buy. And then they go on CNBC and they go, Merrill Lynch is long on blah, 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 and recommended buy and blah, 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 blah. And that's exactly what they do. And so they tell you to buy it after they already own it and it goes up and vice versa. That's been going on since Moby Dick was a minnow. But the thing I like about her is that, and what I generally like about women in general, to me, they're not as big a liar as men. I mean, men just, they just lie on purpose, intentionally, and think nothing of it, okay? And that's what a lot of male hedge fund managers do. But anyway, this is what she said. She was talking about the future of Bitcoin. What's the company? There's a company called MicroStrategies, which is already taken all of their cash reserves and they've transferred that into Bitcoin. And so instead of having cash as a reserve, their reserves are in Bitcoin. Interesting, huh? So anyway, her point is that they're one of the first ones to actually do that as an institution. And she sees a lot more institutions actually starting to do that. She gave an example. So her example is, let's just say the institutions only take 1%, just 1% of their cash reserves, which is like nothing, okay? And they use Bitcoin as an underlying currency for 1%. Okay, that alone drives Bitcoin up to over 70,000. Okay, depending on when you see this, it's trading, in the low 30s right now. So that more than doubles it. Really, really easy. Okay, so what happens if they take 10% of their cash, not 100% of their cash, but 10% of their cash? If they take just 10% of their cash, guess what? Boom, Bitcoin is over 500,000 just like that. So this is something that is going to happen as far as I'm concerned, is there's going to be downward pressure because a lot of these funds want to just kind of layer into crypto and primarily Bitcoin because they're the most well-renowned, the most acknowledged, the most stable, and so forth. And it's a limited supply. 21 million of them, and we can go on and on and on and on about other things about it. At this point, it hasn't been hacked. It seems like it's close to impossible to be hacked. And all the young minds use digital anyway. You know, fiat currency. If you look at the history of fiat currency, study your history. No fiat currency has endured forever. None. None. It's not my opinion. It's a historical fact. But anyway, so the difference between, like I said, the Bitcoin loyalists is they're much more informed than a lot of these Reddit followers and so forth. So they're not going to be scared away by the manipulation of the whales. So if the whales are shorting it to drive it down temporarily, the Bitcoin loyalists, they don't even care. They don't even care if they drive it down to under 20 or, you know, even 15 or even 10. They don't care because they know and they understand, and they have enough vision to see what's going on with the games. So anyway, just thought I needed to weigh in today. So many crazy things going on. And we will be back in less than a week, continuing to educate you guys and inform you what's going on. Oh, let's make sure we get our disclaimer in. Black Lion Investment Incorporation is not a registered investment advisor. Okay? We are a education investment company. So we educate people on investments in the markets and things like that. So we do not carry any clients' monies or accounts, and we do not carry their private information. So with that said, James Holmes Jr., Black Lion Investments, out, and we'll see you around the corner. Pray for me, and I'll pray for you.